you wanted the best, you've got the best podcast, the hottest podcast in the world. The Chris Voss Show, the preeminent podcast with guests so smart you may experience serious brain bleed. The CEOs, authors, thought leaders, visionaries, and motivators. Get ready. Strap yourself in. Keep your hands, arms, and legs inside the vehicle at all times, because you're about to go on a monster education roller coaster with your brain. Now, here's your host, Chris Voss.
Hey folks, it's Voss here from thechrisvossshow.com. Welcome to the show, ladies and gentlemen. Thanks for coming by. We certainly appreciate you guys. As always, the Chris Voss Show is the family that loves you, but doesn't judge you, at least not as harshly as the rest of your family. If you're watching this video, in the next 10 years from now, we're almost to Christmas time, 2024. And you're like, no wonder he looks so young. But, the great thing about sharing the show is you can make the world better and make people's lives better and improve them. And that way you'll have something to talk about around Christmas and dinner. It doesn't involve fighting, or maybe not. I mean, I've never heard anybody getting fistfights over content on the Chris Voss Show, but there's still time. Just add the box wine. Anyway, go to goodreads.com/Chris Voss, LinkedIn.com/Chris Voss. Chris Voss, one of the TikTokity, as the kids like to call it. I don't know what the kids call anything nowadays. I don't even get their lingo. I'm just like, I don't know. We have an amazing young man on the show with us today. He's going to be talking about his company, B10 Energy, your partner in renewable energy tax credits. We're joined on the show by Eric Gordon. He brings a diverse background and extensive experience in accounting and commercial real estate to his role as vice president of professional services at B10 Energy. He's a Boise State University alum. Eric launched his career in accounting and accountancy after, is there a difference between accountancy and accounting? I don't know. We'll find out. After graduation, he moved into the role as an auditor with Deloitte in their Boise, Idaho office. He eventually transitioned from public accounting to the commercial real estate sector, honing skills in pre-acquisition, due diligence, asset purchase negotiations, debt sourcing, and equity raising, which is what I have to do every time my girlfriend goes to Target. When he's not shaping the future of B10 Energy, he's an avid traveler, baseball fan, enjoys country music, we won't hold it against him, and values time to spend with his wife and 4 daughters. Welcome to the show. How are you, Eric?
Good. Thank you, Chris. Thanks for having me on.
I tease the country, music, and it's good music, Devil Went Down to Georgia, that's a good song.
Hey, it's Charlie Daniels.
And anything by Hank Williams Jr., pretty much. Eric, give us a .coms. Where can people find you guys on the interwebs?
Right now, so b10energy.com. We've also set up a special page for this. Anyone that's interested, it's info.b10energy.com/Chris Voss.
And the link for that will be on the Chris Voss Show. So if you want to find that, you can look it up there. So give us a 30,000 overview of what you guys do there at B10.
Yeah, so real high level. We're accountants, we're attorneys, we're entrepreneurs who genuinely want to help people save money on taxes. Right? We want to help those changing the world have more resources to keep on changing it, right? And we do that through helping people save money on taxes. So that's super high level. That's what we do.
See, at first I thought that you guys were, a vitamin company. You ever get that?
Just a little, yeah. B12 was taken, so we had to go to B10.
Yeah, B10. That's 20% less B12. See, I did math in school, and that was about it.
Yeah, saving already.
So, tell us about your journey through life. What got you into this business? In your words.
So personally, like I went to school, studied accounting, and really I owe it all to my Accounting 200 professor, Norm Nimro. So shout out to Norm there. He made somehow in a class of 900 students, he made accounting cool. And he was a professor that retired. I believe he retired from his industry job, early 30s, mid 30s, actually went and taught for free accounting. So he went to the university, said, hey, I don't have a doctorate degree. I started off at Brigham Young University. They go, we can't really teach here. You don't have a doctorate. He said, I have a master's. He said, well, did I mention I would teach for free? And they said, when can you start? And so he went in there and just had a love of it. And I remember I took it as an elective thinking, I should probably understand some accounting, getting in there. Mm-hmm. And his class made me fall in love with it. And I was like, this is really cool. This is like useful stuff.
Isn't that great how teachers have that ability to open the world to us?
Yeah, it's his energy, his passion. And this was a class of 900 students.
900?
900 students in the auditorium.
Hard to learn with that many people.
But he connected with you, and that was the start. I remember I took that class. I took another one. I'm like, you know what? I'm going to major in accounting. I want to do it. And the journey's been a little bit different over time. I started off in public accounting, like you mentioned. Great education. I switched in commercial real estate. It was a love and passion of mine. And actually, our current CEO that I work with here at V10, we worked in commercial real estate about 20 years ago. That is where we met. And just kept in touch ever since. We kind of went different paths and came back together after he had founded V10. And I wanted to be part of the team. So like I said, I've done commercial real estate, done restaurants, but have always worked, in accountancy, finance there. And I think it's the language of business. It's amazing what understanding some accounting, some taxation can do for business owners and entrepreneurs out there.
Oh, yeah. Depending upon which books you're using. That's an entrepreneur joke. Don't listen to that, especially if you're with the. So, you guys, what made you prompted to start this business at V10? What was the catalyst, and how'd you kind of put it together?
So, the catalyst was really one of our founders had a successful exit from a company. Right, had sold the company he had started, and really did not know what tools were available to him to help him preserve some of that precious capital, right, that he had earned. And in talking with our current CEO, they started talking. He's like, did you do this? Did you do this? And he's Don, that was great information 12 months ago. I wish we would have had this conversation last year. No, I didn't do this. I didn't do this. Hey, why don't we do something? He was looking for his next move. He's like, why don't we do something? But let's do, and forgive me for saying this, he said, let's start an accounting firm, but make it a cool accounting firm. And that's an oxymoron, right? What are you talking about? You
guys are trying to get the chicks, huh? I see what you're up to.
But it was just, hey, how can we help people? So we don't do prep and file of tax returns, right? So we're more of that specialist that can help with certain areas. So we work with people's tax CPAs, tax professionals to help in certain areas. Right now we do a lot of work in the renewable energy tax credit space. That's where we spend the majority of our time. But we work with people there to help them, like I said, help them save money on taxes there. But that's what started it right there.
I love entrepreneurism. We love entrepreneurs. And so what are these tax credits you speak of for the layman and probably Gen Z to learn about? What are these tax credits, including renewable energy tax credits?
So real quick, people talk about tax credits, credits and deductions, right? And those sometimes are used interchangeably. Just the difference, right? A deduction reduces the amount of income you're taxed on. So it brings your income down. While credits reduce the amount of tax dollar for dollar that you owe. So that's kind of the difference between a deduction. We all hear about the standard deduction or itemized deduction. Then you have tax credits, right? So these renewable energy tax credits, it's just that, right? Credits are a way the government incentivizes certain behaviors and supports specific industries out there. So they've come out, and the renewable energy tax credits have been around, late 70s in one form or another. So they've been around for a while. It's a way to incentivize people, industries, to participate in the development, production of renewable energy. So that's why they exist. That's what they are, and they're probably back in the news if you've heard about them lately, because with the passage of the Inflation Reduction Act, they've actually made these credits transferable for the first time. So that's kind of, what's probably brought them out in the news cycle these days.
That's pretty darn cool. So they can do that with them. What's my next question that I have for you? So on these renewable tax credits, why does it matter? Like, how big of a difference does it make?
Because they're transferable, entities and individuals that don't have really any ownership or anything to do with a renewable energy project can purchase these. And so if you're a profitable C corporation, right, you can purchase the tax credit. You can purchase it at a discount. And so I think that's what really kind of what makes them matter now is, we at V10 Energy, we are owners of commercial solar facilities. Those facilities, when we place them into service, produce a tax credit. We then sell that tax credit to unrelated parties for cash, and we sell it at a discount. And so it's a great way to save money on the taxes that you owe by buying a credit for less than $1 on a dollar. So if you pay 90 cents for $1 of credit, you just save 10 cents for every dollar you bought.
Oh, wow. Definitely. And then, is this an investment thing that people try and do to make a, I know that like Tesla was doing tax credits for carbon tax credits or something like that. Is this something that if you're an investor, maybe you could look into?
If you're an individual, you can use them for yourself. So I wouldn't say there's so much as an investment, but as a way to save money on your tax bill.
Okay, so you can.
Yep. So it's you owe $1 million in taxes.
I do.
Yeah. So sorry to break that to you, Chris, but
give me a flight to Mexico. I don't know what
but if you owe $1 million in taxes and you can buy tax credits worth $1 million for $900,000, it's like, hey, you saved yourself $100,000.
Really?
You can pay that bill, and there's certain people, individuals that can use them, certain ones that can't, and we can go into those details. But that's at its essence. I always when the best way to look at it, is I think we've all been to Costco before, right? And we've seen that rack of gift cards, right? And they're selling gift cards to a restaurant. It's, hey, buy $100 gift card for $80, $85, $90. If you're going to that restaurant and you're going to spend $100. Stop by Costco on the way, buy a gift card. You only spent $90, but you got $100 worth of benefit from the restaurant. So that is a very, scaled down example. But that's, what buying tax credits at a discount is very similar to. You owe the money to the IRS, right? You owe the taxes. You have to pay that $1 million tax bill. We'll sell you credits, right? And there's limitations and everything that we can get into, but it's just a way you can actually buy $1 million of tax credits for less than $1 million.
And then if I owe the IRS $1 million and then I buy $900,000 of tax credits, that means I only owe the IRS $100,000. Can I go sell those 900,000 tax credits, maybe at some sort of profit to somebody else, or?
So these tax credits can only be transferred once.
You can see where my head's going.
Yes, that's good.
Can I put these on? Can I put these on that concert ticket site where they mark up everything 5,000%?
So these are. There's rules on the transferability. They can only be transferred once. But like you said, if you owe $1 million in taxes, you buy $1 million of tax credits, right? And like I said, we can get into the limitations later, but you buy that for less than $1 million. So you get the tax credits to pay your tax bill, but you pay less than their, you can say, face value. So you pay $900,000 or $950,000 or whatever that may be, the price you agree on. So it's just you're paying the tax. You can also use these to offset your quarterly estimated taxes. So there's some time value of money in there. But yeah.
That's important.
Yeah.
Is there any sort of discount if I can have my foundation or a charity that I own, pay them, or is that just too many hoops for the earth? Yeah,
there's not, because whoever buys them has to use them, and since those charities don't pay taxes, so they won't be able to put them to work. But
Turn it. Could I donate them as a write-off? Can I give them to somebody as a charitable write-off?
So if you produce them, you can sell them, right? If you own the solar facility, you can go through. But like I said, it has to come from the original owner, and they can be transferred one time or sold one time.
So what you're saying is I need to start a solar facility as a business. Is that what you're telling me?
Go build some solar farms, Chris. Go build some solar farms.
I'm going to put one in the backyard and see if I can get the double dip on the write-off. Can you tell there's a certain entrepreneur who does his own accounting? Yeah. There's a reason we don't use normal accounts. So I think we've covered transferability then. And do you guys focus on this for your investment advice that you give people?
This is where we spend a lot of our time. So we are owners, B10. We own commercial solar facilities throughout the country.
Oh, wow.
Right? So we own those, manage those. When we place one in service, so when we build one and get ready to make it live, it produces a tax credit. It's called an investment tax credit. It's based off what we paid for that facility. And so we have these tax credits, and then we work with tax professionals out there and sell them to entities and individuals for a discount.
Why do I think that my old man, when he was, I think it was in the 80s or something, he had some barter group he joined. And you could barter stuff. Like one time he bartered, somehow he had some sort of lamp or some crap that was expensive. It would look like something from the 80s. It was just god-awful, right, that you see in a Pizza Hut or something. And it was some big glass lamp. And he traded it for dentistry on the barter thing. I wonder if I could trade these credits on a barter system.
So to date, we have not accepted any lamps, in return payment.
No, the credits. Could I get the credits? I could trade them for, I don't know, food or Amazon or. Can I get these? Is that on the list of Amazon things?
Unfortunately, these credits are somewhat limited, and they can only be used for taxes, for federal taxes.
Wow. Is there a max you can deal with can you write out, like if I owned $1 million in 1 year and I could write off $900 million in 1 year, isn't there like a limit where you have to, if you're going to write off certain very big things, you got to spread them out? Yeah,
so that's you're looking at depreciation, right? So expensing like a building, right? You don't write off the whole building.
Yeah. The
buildings depreciate over time. So 39 years for commercial there. So you depreciate it. Now there's different things you can do to accelerate that depreciation. Mm-hmm. With these credits, these are general business credits, which means that they can offset approximately about 75% of a taxpayer's tax liability that qualifies to use them.
Jesus, I'm going to do that. That sounds like way better than paying the IRS. I don't know why. Pay the IRS, folks. I'm not saying that. But, technically, you can do whatever. I'm going to start a solar company. Does it have to be? Anyway, I'm just joking around. There's some other things you guys work with in the space, IRR, savings. Talk to us about some of these other different vehicles you have.
Yeah, so really it's just as you analyze this, when we talk to an entity, right? And real quick, there's two really ideal users for these tax credits. One of them are individuals that have significant passive income, right? Okay. These are passive tax credits. So they can only offset tax derived from passive activities for an individual. So that would be the first user. Second would be profitable C Corps. So C Corps are not subject to the same passive activity loss limitations as individuals. So C Corps can use these. So if you're a profitable C Corp, you can use these tax credits to get your
profits.
So it's like I said, it's on so it doesn't factor into your expenses and your profits. It's once you've done all your work and your accountants and all the work, and they come to you and say, okay, Chris, we did everything. We took the deductions. We came this. You owe X number in tax, right? You owe $1 million. And that's, there's nothing more we can do. That's what you owe the IRS. So you're like, okay, so I have to cut a check for $1 million, right? Mm-hmm. Now your options are like, I can cut a check for $1 million, right? And pay that, or cut for 100,000, whatever that tax liability is. Or if you're one of those use cases that I just talked about, hey, I can buy the credits that can pay that $1 million, right? Or in this case, up to 75%, $750,000. I can buy those for less than $750,000. So I can save money. It still goes to the IRS. You're still paying your taxes. These credits are just used to offset that federal tax liability. But when you buy them and for how much you buy them for, and offsetting your quarterly estimates there that you don't have to pay because you're using tax credits, that's where that kind of factors in where, hey, you're actually saving significant money, maybe even more than just the offset of the 10 cents of, time value of money comes into play when you do that. So that's when we talk about IRR, takes into account the time value of money and what you paid and when you paid it and everything. But those are some of the pros of using these, like I said, if you're in that use situation.
Time value of money. A lot of people don't think about that sort of stuff. They don't equate time and money.
Yes.
We'll even talk to, I learned a long time ago, and I would think it was from an executive, maybe at Apple, but your time, especially if you're a very busy person, is, if you're just sitting around playing video games all day, like who cares, I guess. But your time value of what you earn, it's important for you to know per hour. Like, how much time am I worth per hour? And especially as an entrepreneur. And then you kind of have to go, is this worth that time? If anytime I would, I don't know, what's a good example? Anytime I would go get some office supplies at Office Max or something, I'd be standing in line and waiting for that. And you'd have to ask yourself, what's the time value of my financial billable time per hour that I do? And why am I using an hour to go buy, I don't know, stapler supplies? We'll just make up some. When really I should delegate that. And my time should be utilized for, client being in front of clients and earning more of that money. And, just thinking about things like that, how much time you waste on stupid stuff. I learned, I think, from the same executive, I think he was from Apple, and he gets a lot of mail, and, companies do too. And I used to, when we had our big companies, and I don't touch mail twice. I process it once, and I make the decision as to whether does it go in the trash or does it go in the thing. And so I got really good at that. In fact, my employees would kind of laugh when I dump, I just quickly processed mail and junk mail into the garbage. And they're like, holy crap. And, but yeah, time value of money is really important.
Yeah, it's kind of, it reminds me of the other thing we learn in school too, when they talk about sunk costs. And this was another norm lesson that he taught us. And I remember sitting in his class, he's like, you guys got to understand sunk costs. You're going to be accountants, you're going to be executives and this and that. And he gave an example of, he was in California on some business retreat, and they had all paid to golf at a very expensive golf course, and they had prepaid for it. The day came and it was raining and it was windy and it was awful. And he was with a group of financial executives, and they all go to the golf course, right? And he's like, what are you doing? They're like, well, no, we paid hundreds and hundreds of dollars. We're going to go golf. And he's, guys, that's a sunk cost. That cannot do you want to play golf in the rain? Yes or no? No. Then don't play golf. I went, had a great time with my wife doing other things because I didn't factor that in. And they were stuck on this sunk cost. Move on. So go back to kind of using your time. Those are some fun lessons that you can.
Sunk cost fallacy describes my first 9 marriages. I don't know what that means, but you'll figure it out. But yeah, it's throwing more money after bad, essentially, and feeling trapped in it, when really you should see outside the box and be like, it's probably just better to burn it. Especially for the time, and which does explain my first 7 marriages. Anyway, what is your ideal client for different things? Is there a minimum net worth they have to have? Do you look for individual investors or more corporations, et cetera, et cetera?
Yeah, so I think when it comes to an ideal client, really those two situations. And I would say we start off, really you're looking at individuals that probably have a $500,000 and up per year tax liability from passive activities, right? So they owe tax based on passive activities, and that includes all your passive except portfolio or investment income. So if you have some real estate that you're a passive owner of, passive investor, if you have some K1s that you're have passive ownership in, so that's one. So an individual with significant passive income with that tax liability probably of a $500,000 or up, or a profitable C corp. Right, so a profitable C corp with at least $500,000 in tax liability a year. Those are probably the two ideal client situations that we deal with. Just as I said, because those C corps aren't subject to the passive activity loss and credit limitations, and so they can use that to offset up to 75%. These being general business credits. So passive activity individuals and profitable C corporations are who we work with the most.
The next question I have up for you is there a lot of work that's required by the CPAs versus the clients? Is this going to add a lot of, problems where we got to do, are we going to have to work, eh?
We try to do as much of the heavy lifting as possible. So we work with the CPA, in making sure everything is filed correctly. We prepare, for example, the transfer election statement. We give you a copy of our return that created the tax credit for your reference. We answer those questions. CPAs are familiar with these tax credits. They may have not transferred them before. They know what they are in general, but this new transfer, they may not have done that. So we really try to do all the heavy lifting. We hop on phone calls with your entire team. If this, from your general counsel, other legal representation, your financial advisors, your tax professionals, to really make sure we answer the questions, go through a proper due diligence period, and get them what they need. So there is some work on there. And as far as filing, the tax return or amended tax returns, if you're doing a look back at prior years, but we really try to do as much of the heavy lifting as we possibly can.
You answered my next question that I had set up was you guys work at the CPA and all that good stuff. I mean, it's amazing. I need to really get familiar with more of this stuff, because that's why we do the show. The dollar for dollar offset, safe and sound, smart use of capital. I love it, man. I mean, utilizing your money for something that doesn't just get thrown away into the government, I like a lot. Because, I don't know, money's money and return on investment. What are some things we haven't talked about, what you guys do there at B10 Energy that I haven't asked you or covered?
We really try to help the entrepreneur network out there. right? And so this is these tax credits are one way. It's where we spend a lot of time right now. But we try to help, if there's an upcoming exit, right, and you want to plan for that. Other tax credits. We do a lot of work in the research and development tax credit field. We help, high net worth individuals. And just like I said, that's what pushes us every day is, hey, how do we help? And in this case, we're tax strategists. We're experts in tax. That's how we help those who are changing the world, right? That's how we change the world in our little sphere. We help those who are doing it out there have more resources. So anything like that, we really love to do. And it's great being in the renewable energy space. So we have these projects across the country. Demand for energy is not going down. The price of energy isn't going down, and we want to help on that side. And then, like I said, if we can help with corporations and helping people offset some of their tax liability with these credits, that's what we're here for.
Do you guys get Christmas cards from that Thunberg chick? What's her name? I lost her.
Is it Greta?
Greta. I had the joke set up, and then when I did it, I lost the Greta. I just blanked. Alzheimer's kicking in, folks. So, yeah. So you guys like doing this business, renewable energy tax credits, and then tax savings for high net worth individuals, passive income, and C Corps. What a great thing. I mean, I just learned something new today, so hopefully our audience did too. As we go out, give people a final pitch, and then tell them how they can onboard or reach out or find out more, et cetera, et cetera.
Yeah. So to find out more, remember, it's info.b10energy, so info.b10energy.com/Chris Voss is a great page. You can reach out there. Like I said, we're here to help. So if it's any type of tax questions you have, for high net worth individuals, entities, entrepreneurs looking at potential exits, hey, we're here to help. If you want to offset that tax bill that you have, give us a call. I spend a lot of my time on the education side, right? Because this is new, and so educating the entrepreneurs themselves as well as tax professionals, and we work with tax professionals every day. So it's what we're passionate about. Like I said, I mean, it's maybe accountancy doesn't get everyone out of bed in the morning. It's fun, and the field that we've kind of made our niche in an area that we really enjoy, and we think it can provide a lot of help to people.
Yeah, I mean, accountants that are fun. I hope this works out for you guys. You guys can get the chicks. Anyway, I'm just teasing. Making accounting cool again. Because,
Here we go.
Accountants, I can just see accountants being really cool. Like they have supermodels surrounding them. There's an ad with supermodels surrounding them, and they're on yachts in Miami and I don't know, partying and throwing money around. Throwing money. I don't think accountants would do that.
Us accountants have problems throwing money around, but we have really cool 10 keys, and multiple monitors and stuff like that. So.
And that's why Chris does his own accounting. I guess I'll be the only one going to jail. I don't know. Anyway, guys, thanks for tuning in. Be good to each other. Stay safe. We'll see you guys next time.